From the morning reading, oil jumps, energy stocks lift the SPX, push the SPY to a new high close. Tech stocks lift the Qs off support. 8 of 10 sectors moved higher on Tuesday. XLE, XLU, and XLK were the strongest sectors, while XLRE was the weakest sector. Oil futures up $2.03 to close at $45.75. Breadth strengthened compared to the prior session as advancers led 22.16 to 8.59 on the New York Stock Exchange and led 16.38 to 11.24 on the Nasdaq. On the S&P 500 snapshot, the election rally resumes. After a two-day pause, the election rally in the S&P 500 resumed with a 0.75% gain, just a couple of ticks off its intraday high shortly before the close. The 500 is now only 0.45% from a new record close. Of course, its elderly cousin, the Dow, has advanced continuously for 7 sessions, the last 4 of which were record closes. The sell-off in treasuries went on hold. The yield on the 10-year note ended the day at 2.23%, unchanged from the previous close, but a 40 basis point rise from the pre-election close. New highs on the Nasdaq have surged. Unlike the New York Stock Exchange, which has seen a record number of securities trading at both the 52-week high and the 52-week low, the Nasdaq's list of 52-week lows remains low even while more than 400 securities reached a new high on Monday, which is more than 15% of all issues traded on the exchange. Similar surges led to mostly higher returns over the short to medium term, with 2 big exceptions, but the Nasdaq was higher a year later every single time. Financials have enjoyed a new high surge. Nearly 60% of financial stocks have reached a 52-week high, among the most at one time since 1990. After similar surges in the past, the sector had a strong tendency to pull back over the next couple of weeks, but then rally over the next 6 to 12 months. The Dow keeps chugging along. For the 7th day in a row, the Dow Industrials rallied and again closed at an all-time record high. The last few times it enjoyed a streak like this, it consolidated the gains for a couple of weeks. Going back to 1898, that wasn't as consistent a pattern, and over the next 3 months, the index has had a strong tendency to show a positive return. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 5:59 a.m. Mountain Time, and I'm recording this in preparation for the market day, November the 16th, 2016. Remember that on YouTube, you have a free subscription to the channel and can be alerted to new content being published. Give the video a few minutes after being published for the video to be available in high definition. Click on the setting button to choose the high definition playback level. In the same area, you can also control the speed of the playback. I routinely find that I can fully understand videos that I listen to at about 1.5 times the recorded speed. Bottom line, you can listen faster and comprehend at the same time faster than I can talk. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and bounce into the morning report. And at the time of this cut, we've got a little bit of weakness across all 4 of the U.S. broad-based indices. The S&P futures are down about 1/3%. Russell futures are down about 0.5%. Nasdaq futures down a little over 1/3%. And Dow futures are down nearly 1/3%. Crude oil is down about 1.2%. Euro is down just below scratch. Bonds down about 0.25%. And gold up just above scratch. In overseas action, China is down just below scratch, as is Hong Kong, though Japan's doing better, up over 1%. Germany down about 0.5%, United Kingdom down about 0.2%. In terms of macroeconomic reports for today in the United States of note, we have PPI, core utilization rate, industrial production, You have crude oil inventories, the weekly variety. And that's about it for today. And then tomorrow, we have building permits, CPI, core CPI, Philly Fed manufacturing, the weekly unemployment claims report, and housing starts. Further, you had Fed Chair Yellen testifying, so be aware of that. And then finally, the nat gas storage report comes out, that weekly report, which if you're trading in that futures market can be quite important to you. In terms of volatility, volatility continues with the crush. Short-term VIX down to a 10.64. Skew is benign. IV percentiles are all exceptionally low, with the S&P at a 19, the Russell at a 20, the Nasdaq at 28, and the Dow at a 20. We did have standard deviation size moves based on a close-to-close. Come in on 2 of the 4 indices yesterday. The S&P and the Nasdaq were both up by over 1 standard deviation. In terms of the charts for today, let's take a look at our S&P futures, and you see the overnight activity continues to flirt with the area of resistance, and the all-time highs came within some 6-7 points of the all-time high, and has backed off from that point at this time. We'll see where this goes when the all cash participants come in a little bit over an hour from now. Right now, all the indices are expressing some weakness, but we are up against these areas of resistance. So on the S&P. Now, the other markets haven't been necessarily in the same situation, and as you know, the Dow's had a whole series of record highs, and it came up right at the record high in the overnight session and has backed off from there as well. But the back off so far has been a relatively small body, so nothing terribly exciting on that. So that's kind of your overnight session there. On the Russell, the same kind of pattern. In fact, you could see that this, and we talked yesterday how we'd seen something of a slowing and some signs of exhaustion. And right now, you get this kind of, we'll call this a spinning top. And right now, this could be a bearish engulfing. That would be a classic reversal pattern. Now, reversal after a big, huge run like this, and let's not forget the overnight activity and the election evening all the way down to 11:23, now up to 13:08, and now backing off for the first time since that overnight move on the election eve. So we'll see where this closes. The candle obviously has plenty of time left to turn green again. But if it should do this, this would be a classic reversal pattern. And at this point, would be expected to just have a mild retrace, consolidate some of these gains, and then continue in its bullish patterns until proven otherwise. In terms of the Nasdaq had a much better day yesterday. And you see, in the big scheme of things, the Nasdaq is just neutral. Now, neutral compared to having been the strongest of the 4 indices is a kind of a tick down for sure. And you see its activity of recent is running around just below the edge of the cloud. So overall, neutral in that it's about the middle of its range, neutral in that it's hovering right around the bottom of the cloud. We'll see if yesterday's activity is just a one-day wonder, or if we're starting to see the ship right itself in the tech heavy index. Now, when we look at some of those big ones there, you see here's Amazon, had a better day yesterday, and certainly that could be a bullish harami. Then you have Google, also a much better day yesterday. And then let's take a look at Facebook. Not so impressive compared to its recent down action, though would still be considered a bullish harami, or at least a spinning top of indecision. And then let's see, what else will we want to look at? Let's go ahead and go to other markets. In terms of crude oil, big move yesterday, giving back a little bit of that, but big scheme We've had a bounce off the 618 retracement area, and we're back up into the cloud. So relatively neutral in the big scheme of things at this point. Let's take a look at the dollar. Oh, wow. Last night, the dollar was up and on a, it must have been just within pennies here. Let's see, the high was 100.565, literally 3.5 cents away from the all-time high. I say all-time, certainly the 52-week high of about this time last year. So dollars made quite a move since the summertime when you're down around 91 and change. You're up some 10% or so in the dollar, and that's a big move in currency circles, and certainly a very big move in the last 7 or 8 trading sessions. So dollars activity continues to drive the performance of these other markets. We see gold. Gold, of course, has taken a lot of pressure. Bonds, also a lot of pressure, and it's going to be very hard for gold, bonds, and many other aspects of these markets that are correlated in one way or another with the move and the strength of the dollar, that until that dollar strength lets up for those to recover. Now, obviously, strong dollars can help the some of the companies in the index, depending on their exposure to currency exchanges and how much import-export business is done, and that certainly is helping some of those companies. Others, of course, are being hurt. Let's take a look at volatility, and we'll wrap up the charts. You see volatility relatively low, down yesterday into the 13 handle. So this is certainly the volatility of kind of normal bull markets. I wouldn't yet describe this market as a normal, healthy bull market, but it's certainly greatly improved, and volatility is certainly one of the things that has improved dramatically in recent sessions. Let's go ahead and go to the daily report. And first of all, intermediate term phase opinion, market phase 2 is bullish. It's at a trend reversal phase. The 3 market timing signals are all mechanical. The first one comes to us from IBD. It is bullish. It confirmed uptrend. The second one, the GMI index, is also bullish with the buy signal in place since 11:10. Stock charts decision point scoreboard had no change since yesterday. We've had the situation of the improving short term, not yet universal, against a backdrop of a relatively poor intermediate term, which is neutral to bearish, and with some mixed signals on the Dow, and then all of them have mixed signals on the long term. So overall consensus here is much improved, with a market that is a bias to the bullish side, but certainly not a clean, healthy bull as of yet. Position sizing opinions are 100% on both models. Intermediate term market postures actually up to severely strong bull now in our primary signal coming from the S&P. And this is an improvement here. The sentiment line has finally turned. It is now a weak bullish sentiment line. So what that means is that the expectation is that most of our cycling legs, we would expect the bullish leg to be the longer leg and bearish pullbacks to be less pronounced and probably shorter in duration. So much improved here in the last week or so. S&P, Dow, and Russell all in the severely strong camp, up over 80, and the Nasdaq much improved, now also a strong bull. In terms of the hedge warning status, we're still level 1. Until we get a little bit better stack here in the decision point scoreboard on the intermediate term, it's really hard to lower this to a 0+ and call this anything close to a normal, healthy bull market, even with some elevated adverse conditions. We've got to get this intermediate term to turn to be in support of that. So we'll remain at hedge risk level 1 until we start to see a better stack. In terms of the strategy opinions, all 3 are in positive positions to be able to initiate new positions for novice traders, though some defensiveness is still suggested, considering that the S&P is up against resistance against its 52-week high, And that high has been, challenged multiple times. So our expectation is that resistance will hold until proven otherwise. So very hard to be adding a lot of new exposure as you run right towards that wall of resistance. In terms of specific warning areas, you see we continue to see significant improvement in the volatility-based area. Only one significant warning remains, and that is the Nasdaq distribution day count at an 8. In terms of the trend-based area, no warnings exist. Everything's back to normal, and generally in a fairly strong bull category. In fact, that should be elevated to severely strong bull. And then on the key intermarket risk aversion indicators, the one that had flagged shortly as risk off has turned and has clearly signaled back to risk on. So all 5 back to risk on. Sentiment now actually going from neutral up towards the greed area. So some improvement or change there, I guess we should call it. Not necessarily improvement, but change. In terms of sector specific, you see energy, telecom, utilities, tech all had big days. Consumer staples, a very sound day in terms of very wide breadth. Some of these sectors, such as utilities and consumer staples, had been on the short side of the rotation that had been occurring since the post-election period. I suggested yesterday that we might be setting up for some retracement of the excess moves that had taken place both to the upside and to the downside, and I think we did see some of that yesterday. Financials and so forth still positive, but certainly not the heroes that they have been for many days since the election. Only real estate was negative. In terms of the intermediate term market posture, well, actually, in terms of the 3 different time frames, our market posture by sector specific, we'll continue to see consumer staples and utilities relatively poor. Other sectors, though, financials and transportation, green in all 3 time frames. So we'll continue to see if we can build on these and show more consistency. Right now, the best consistency has been seen in transportation and financials. In terms of percent change, here you see the energy with the big move yesterday, and now the 5-day, 1 month, 3 month, all much, much better. And indeed, let's see here. Others that are the financials, of course, have had a really strong performance in all across the time frames. Industrials. Also, probably should mention industrials. So that's where we are with the sector specific. Okay, that should be enough for today. Let's go ahead and roll through some of these. I will mention, I did at the top, about the YouTube video. And if you go to this hyperlink right here, that'll take you to our channel. And if you hit the subscribe button, that'll let you know when new content is posted to the channel. It doesn't cost anything at all to subscribe to our YouTube channel. That's free. But by doing that, you'll get timely alerts as to when this stuff gets published. Also, a couple tools here you should be aware of. Make sure you're watching in high def. If you jump right onto a video, sometimes it's still being processed. And you can listen to that starting session where I'm generally giving some material from my morning reading and sharing that with you from a number of different respected financial authors. But then when you get to the charts and so forth, make sure you're watching in high definition. You'll have much better resolution. Also note you can get full screen. And then last, I would note that you can speed up that playback to 1.5 times the speed in which I actually recorded it at. And generally, you'll find that you'll understand, comprehend what you need, pick up the changes. And we talk about the change and rate of change around here. That's what's important from one day to another in the routine. And you'll be able to pick those up listening a little bit accelerated pace and cut that, generally from about a 20-minute video down to some 13 minutes or something like that. So a couple helpful tools that are available there. I'll scroll through these slides. If you see something of interest, just hit the pause button. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the full set of disclosures can be found at the hyperlink down here at the bottom of the slide. We'll be back here tomorrow for the next version of the Falcon Global Market Preview. In the meantime, be sure to manage your risk. That'll give you the consistency that you've been looking for, and seek every single day to go out there and learn something about this most important craft, your trading and investing. Good trading.